Hey guys, welcome to the Boardroom. This is going to be a fantastic episode for you today. We got a CEO, founder of one of the largest institutional managers, providers of ETFs in the country, Raj Lala. He's CEO of Evolve ETFs. He founded the company. Pretty much every ETF he's put on the shelf, on the table, has kind of doubled or tripled or quadrupled. He's got a whole slew of them. We're going to talk crypto. We're going to talk NFTs. We're going to talk what he's doing with respect to his own wealth. It's going to be a fun time. Stay tuned. We're coming into it right now. All right, welcome to the Boardroom. Great to be here today. I'm pumped. You're going to love the format here. We're going to rapid fire. We're going to go through a whole bunch of really neat topics. We got our guest. He's right here, Raj Lala. Welcome to the show, Raj. Great to have you here.
Thanks for having me, Rob. Always a pleasure to be here.
Yeah, I love having you on. Today we're gonna debate some topics, stuff that's topical right now, stuff that might be topical in the future. You're president CEO of Evolve ETFs, so you do have you've had the wonderful launch of EBIT, crypto. We'll get a bit into crypto. We'll touch on a few different topics. First topic here, I want to get into first of all the Reddit mania. You followed it. You watched it. GameStop went from, my dad calls it GameStop, so now I've been calling it GameStop. Went from $30 to $480, back down. Now it's rallying again. Crazy. Do you think this Reddit mania is here to stay? Do you think they're going to be able to influence stock prices? First and foremost.
Yes, I think it is. I think this platform, and it'll be beyond Reddit down the road, but this platform has provided investors a democratized way to actually invest in different stocks and to express their beliefs that sometimes go against the establishment. So I do think this is providing a voice to a lot of investors. And as we all know, many of the young investors today are starting to accumulate quite a bit of wealth. So I think it's a great platform. Would I agree with a lot of the stock picks that they're making? Not necessarily, but I think more entrants and participants in the market makes for a healthier market.
But there's no way this was all Redditors. Come on, there's no way. This had to be institutional money moving it. The amount of volume that we saw, there's no way it was all Redditors. Or do you believe it was mostly Redditors?
I think it was a lot of the established, the funds, for example, trading off of the Reddit sentiment. So recognizing the power of that movement and saying, hey, there's momentum in these stocks. And if these investors are starting to pile into it, then we should be capitalizing on this trade opportunity. So I think it became, maybe for a lot of the investors on Reddit, it was a psychological investment. They believed in the company. I don't know that many hedge funds or fund managers believed in GameStop, but they did believe in the power of the investment community for sure.
If there's two sides to the trade, who do you think made more money, the institutional or the retail?
I think that there was a lot of institutions that lost a lot of money off of the trade.
Big money, yeah.
For sure, because they weren't following the sentiment pattern properly. I think that there was also probably some bad actors on Reddit that were pumping up the stock and then were pretending to still own it, but they didn't own it anymore, and made out like a bandit in some cases. But I couldn't quantify whether the funds made more money, or the establishment, we could call it, or whether individual investors did better. But some people obviously made a lot. I mean, I heard stories, I'm sure you heard them, about like an 18-year-old kid that put $1,000 in and turned it into 20,000, 30,000, whatever that amount was. So some people made a lot of money off of it. Like I said, I think if you've got multiple opinions in a market and those forces coming into play, I think it makes for a fairly healthy market.
Healthy. I like that word. Do you think there's any reason why either any of the securities commissions or the regulators should get involved and try to protect anyone in these trades?
Tough call. I've seen this come up a few times in the US, whether there should be regulation. I'm a fan of less regulation in our markets, but they're obviously there to also protect certain investors. I think if all of the information is clear for people and they're making an educated investment, then I don't think the regulators should be involved in it.
Okay. And in the future, so now we've got, do you think the floor on a company like, GameStop, for example, has now moved? It used to be kind of a $10 target for most companies. Do you think the floor has moved now that they've had so much exposure, so much branding? Do you think, it's no longer, the floor is no longer a $10 stock, might be something significantly higher?
Well, I mean, GameStop to me is an example. I just don't get it, to be honest with you. I don't understand the business case for a company like that. I kind of feel like, to a degree, they're like the Blockbuster compared to Netflix out there. Now, I know that they are starting to embrace digital a little bit more. I believe they just brought on board somebody, I think it was announced today, to help build up that business. But I mean, for example, that we have an e-gaming ETF. That company would have never made it into our e-gaming ETF because they're really more of a retail platform. And to me, when I think about the gaming market, the e-gaming market today, it's all cloud-based. It's all digital. The opportunity for the bricks and mortar operations, that just doesn't make a ton of sense for me. So I couldn't tell you whether GameStop's going to $1 or going to to $1,000. I can just tell you my perspective on the business case for that company doesn't make a ton of sense unless they're able to effectively evolve their business model to become more digital.
Yes, I know. I buy games on my PS4 all the time. We're out of time for that topic. Let's move to the 1-minute quick hits. First off, electric cars. Dramatically changing the landscape as we know it?
Oh, for sure. 100%. Starts at the top. It's the countries that are making the big proclamations. Countries like Norway and Netherlands, 2025, no more combustible engine cars will be sold in their country. Countries like the US now under the Biden administration taking on big initiatives for EVs. In fact, last year, 2.2 million electric vehicles were sold, first time eclipsing the combustible engine. So if countries are saying it, and then now you've got the auto manufacturers like the GMs and Volkswagen saying that 2030 they will not be producing combustible engine vehicles anymore, you can see the clear trend is towards the electrification.
I think you're probably right. There will be some cars left in some areas, but you're right. It's likely moving. That's time for that leverage. Second question I want to ask you. One, do you leverage in your own portfolio? Do you borrow to invest stocks traditionally? Have you done that? And would you recommend someone?
I have in the past, but I do not do it. Leverage.
Do you have rules in place where you say if it falls, 10, 20, 30%, then I do it or something like that, or just on gut feel?
Well, I guess we're talking about two different things. We're talking about our portfolios, or we're talking about my personal portfolio.
Your personal portfolio. I'm talking about your personal portfolio.
So in either case, no leverage.
No leverage.
And for our funds, for example, we would actually need permission to actually utilize leverage within the portfolios. I haven't been a big believer in leverage. I just think it's a double-edged sword, and it doesn't make a ton of sense.
I think prudent leverage does make sense, though, Raj. If you could be careful, selective, and you take small incremental amounts, it can absolutely make sense and can add value. We disagree on that one. It's not for everyone. I do agree with you. Let's go to the next one: cloud-based computing or data. Tell me why you're so convinced this is going to be a disruptor.
Well, look at right now. I mean, everything that we're doing is cloud-based. Every video conferencing tool we're using is cloud-based. I often say to people, thank God this pandemic took place now instead of 10 years ago. If it was 10 years ago, we wouldn't be able to be doing these video conferencing. We wouldn't be able to stream movies off Netflix, the games, and so on. And that's all cloud-based. So cloud has completely changed our world, enabled us to work from home, extract data. Like, when was the last time you went to a store to buy the latest copy of Microsoft Office, right? When was the last time you actually plugged anything into your computer? It's probably been a while, other than your power source, because everything is uploaded from the cloud. So it's a massive game changer. It's going to create multiple entry points for people to access their data and their software, as you hear the term SaaS out there, and you're going to continue to see it grow.
Software.
Yeah, absolutely. It's going to continue to grow. No doubt about it.
Next one here. Sports card collectibles. Is it a bubble? Have you been following this at all? Gretzky cards are selling for $1.5 million, $1.3 million. Do you think it makes sense as an alternative asset class to own sports cards or collectibles?
I think we're moving into this realm now of, so many people finding different ways to capitalize on traditional. I mean, you and I traded hockey cards as kids, right? And sometimes we actually even got some money for them. Now, I mean, that Gretzky rookie card, hopefully neither of us gave that away when we were kids.
I
And
used to give them away because I hated the Oilers. I used to give them away all the time.
yeah, I mean, the gum was pretty terrible too in those packs too. But I think it's interesting to see things like this starting to make their way into the investment world and people actually making money off of it. And it's all about scarcity value. So if people can figure out a way to make money off collectibles like hockey cards or game memorabilia, all the power to them. As long as there's a consumer that's willing to pay a price on the other side, then go for it.
Let's get into gaming, e-gaming. 1 minute on that. Huge, evolving, disruptive industry. You got an ETF there. What's the focus? What does the next kind of 10 years look like in your mind in the e-gaming space?
Yeah, e-gaming was big before the pandemic, and it obviously got accelerated through 2020 and so far this year because more people were at home. They were looking for cheap forms of entertainment, and e-gaming fits the bill. And the catalog doesn't get stale, right? I mean, people are running out of shows to watch on Netflix and some of the other streaming services because the content's not really increasing very much. And it's interesting when you think about e-gaming. I mean, you can play a game 100 times. You won't watch a movie 100 times. You might watch it 5 or 6 if you absolutely
Dances with Wolves. Dances with Wolves.
But I think when you look at the e-gaming industry over the next 10 years, where it's going to be driven is by mobile functionality, the smartphones.
I agree. NFTs, non-fungible tokens. Are you and I both in the dark on this? Do you get this more than I do? So it's a token. It's tied to the blockchain. It's non-reproducible in theory. Would you ever buy one of these things?
I would say I would reserve judgment on this because I agree with you. It's still so early, even though this actually started a few years ago. It's not that new. It's really started to come out into the spotlight for your listeners. Non-fungible tokens is what NFTs stand for, and it's a way to, obviously, a little bit like the baseball card analogy. It's a way to take pieces of art, video clips, and actually authenticate it through the blockchain technology, usually through Ethereum. And it's really interesting. Again, if there's somebody on the other side that's willing to pay $6 million for a video clip that is authenticated and fully original, then I think it's interesting. But it doesn't replace cryptocurrency because cryptocurrencies obviously are fungible. But it's definitely an interesting area of the market. Way too early to tell how big this could be.
Debt. Do you have kids? You have kids, right, Raj?
Yeah.
Are you going to tell them to pay down their debt, pay down their mortgage first, or are you going to tell them to save up that money, that spare money?
I'm going to tell them to pay down their debt.
Pay down their debt.
A little bit back to the leverage side as well. Not a huge believer in it, and I'm not a huge believer in debt. I mean, it's very tempting at today's interest rates to borrow and go and invest, for example, or to do other things with your money. But I've always been a fan of, if you don't have to have debt, then don't have it because it weighs on you. It's a mental thing too, or psychological.
Emotional. It's all emotional and mental. I totally agree. Last one of our quick hits, 1 minute on cybersecurity. So cybersecurity, I think for me as a firm, that there's no chance that I can cut my cybersecurity bill. And I remember you saying that at some point. What do you see in the future of cybersecurity?
Well, you look at all these massive attacks, right? SolarWinds and the latest one with Microsoft. And now the US government is going to start to really push companies to make sure they have proper infrastructure in place, especially the two big to fail type of companies and government agencies. And eventually you're going to start to see things like cyber insurance. But we all know insurance companies, right? They're really good at not having to pay on a claim. So they're going to want to make sure that they're using minimum infrastructure. What I love about the cybersecurity industry, to your point, is it's a non-discretionary spend. It doesn't matter how terrible your financial quarter was last quarter. You can't afford to turn around to your board and your shareholders and say, well, we didn't have good financial results, so we've decided to reduce our spending on cybersecurity. It's the death knell for a stock to be breached, for the CEO's career, and for the board as well. So I love it because it's become like the utility section of the technology industry.
It's funny because I actually used to do insurance litigation for a living, Raj. This is what I did before I was a portfolio manager. I was a litigator and I did insurance litigation. I represented companies who would defend insurance companies. So I saw firsthand what the strategies were for sure. Head-to-head chat here. We're going to talk 5 minutes here on crypto, specifically Bitcoin. Does Bitcoin, first off, I'm just going to throw this question at you. Does Bitcoin belong in every Canadian's portfolios?
I believe it does. I believe that the industry has changed. Bitcoin has changed so much in the last few years, and we have a lot more infrastructure around it. We have a lot more adoption around it. And I know we don't have 50 years of performance data, but so far in the last few years, it's emerged as an uncorrelated asset. So within a portfolio, it can actually provide some diversification. There's been very little correlation to North American equities or fixed income. I believe that many more companies are going to start to use it as for a portion of their cash reserves as well. Institutional investors are going to start to adopt it. So I would say that a lot of investors are looking, a lot of advisors I'm speaking to, a lot of investors I'm talking to are looking at, having a 2.5% weighting to Bitcoin, because if it continues at this 200% per year return, which is what its 10-year annualized return has been, well, then that could be something relevant within a portfolio. But if we're all wrong, and if we're sitting here this time next year and it's down 75%, well, it was only a couple of percent of your portfolio, so it's not going to sting you that bad. So to me, I do believe, based on where Bitcoin is today, that it should be part of a lot of portfolios, but it's up to the advisor, like you, obviously, to determine what percentage of that portfolio it should be based on risk tolerance.
Yeah, I think for me, my opinion on this is I certainly do believe, and I was kind of one of the early adopters to this, I certainly do believe that they do fit in certain individuals' portfolios. I would probably throw a caveat out there, Raj, that it should be for individuals who have a max growth profile, who truly understand volatility, who actually are willing to trade off increased returns for increased volatility, and actually do get it. And that's not, I don't think that's the entire the entire swath of Canadian retail investors. Maybe it's a portion of them, but who knows? Maybe we'll be sitting here in a day, Raj, and there'll be crypto in every kind of balanced mutual fund. Do you think that? Do you think we ever see that happen?
We're talking to a lot of fund managers and a lot of conservative institutions that are looking at this as, for example, not just an uncorrelated asset, but an inflation hedge. A lot of people are getting concerned. I mean, you cannot create more than 21 million Bitcoin that exists today. You can print, as we can see through all the quantitative easing, you can print more money. And so we are potentially going to be entering into an inflationary environment. Once again, another reason why Bitcoin is starting to pick up a lot of interest with investors. Uncorrelated, inflation hedge. It's got some of those characteristics of gold, but that's why it's called digital gold today.
Yeah, I was never a gold guy. I never believed in kind of gold in a portfolio as an inflation hedge. I understand the data, I've read it, and I get it, but I'd rather own something that pays a dividend, or that's something that's got growth, or that's something that's got a future cash flow projected. So we never were gold bugs. What would you say to the gold bug now who's saying, forget crypto, gold can act as that?
Yeah, we're just in a different era now of a digital world. And so you're right. I mean, some people look at gold as an inflationary hedge, and there's only a finite amount of gold that exists in the world. We don't fully know exactly what that finite amount is. We do have a clear knowledge of what the finite amount is of Bitcoin. I would today's investors, they're looking at crypto mining, they're looking at Bitcoin and that amount, and they realize that this is a digital form of gold, easy to store, way easier to store than gold.
Yeah, I totally agree. So I got about 30 seconds left here. The asset allocation, you said 2.5%. Do you ever kind of see this as being kind of a larger than 5 or 10% holding for anyone? And would you advise anyone to do that?
It really depends on the investor's risk tolerance. And I agree with you. There are certain investors that, could potentially have a bigger allocation to it. But most of the people that I've been speaking to, it's a little bit of the FOMO, right? Well, I've been watching it go up. I've heard about my friends that have made, millions of dollars by owning Bitcoin. So I want to have a little bit. And so when my friends talk to me and ask me how much they should have in it, I always say to them, just put a couple of percent, because like I said, it just takes off. Great. Good for you. But if it doesn't, because there's so many different things that could be challenges for the crypto market in general or Bitcoin market. If it doesn't, then it's not going to sting you.
Yeah, regulators for sure are going to come calling. That's it for time for Bitcoin. Personally, for me, I'm of the kind of 2% range. If it makes sense, if it's something you understand and you appreciate it. And my preference is definitely Ether over Bitcoin. But I digress. Maybe someday you guys will have an Ether ETF. We're doing a quick over under here. GameStop price December 31, over or under $110? Under. Bitcoin, December 31, over or under 69,000?
You're picking tough numbers here. Over.
Okay. Better performer over the next 2 years, Ether or Bitcoin?
Bitcoin.
Best performing commodity over the next market cycle, any commodity you can think of aside from crypto? Palladium.
Maybe gold.
All right. Evolve's best performing ETF over the next market cycle. Let's go 5 years.
Cybersecurity.
Are we going to see another billion-dollar movie at the box office? There were 47 all time. There were like 10 2 years ago. None last year. Is that going to happen again? No. More money to be made. Junior oil or junior mining over the next 5 years?
Junior
Mining. When does Shopify get passed as the largest Canadian company in market cap or ever?
Today. Got passed today.
Today?
Yeah. Royal took over today.
Oh, it happened today. Okay. Yeah, because I knew they were dropping. Oh, that happened way quicker than I thought it would. I made these questions a week ago, to be fair.
But by the way, it happened today. But sorry, it happened yesterday. But given the markets today, could overtake them again. But yes, as of yesterday, because of the drop in tech, RBC took over Shopify.
Note to L, we'll probably have to edit that out. 2 more questions for you. Stanley Cup winner this year?
That jersey in the back is pretty tempting.
They're playing well, the Jets.
Toronto Maple Leafs.
Okay. And finally, last question for you. Biggest fish that you're going to catch this summer in inches?
Ooh. Biggest fish. I might make my way to BC and fish sturgeon. So that would probably, I'm trying to visualize, probably 3, 4, 5, 6 feet.
Yeah.
But obviously they're protected, so I wouldn't be keeping it. It's just for the catch and release. Yep.
Wow, Raj, that was a fantastic episode. Thank you so much for tuning in. We appreciate you taking the time and coming in. Thanks so much. Again, Rob Tatro from robtatro.com, portfolio manager at Canaccord Genuity Wealth Management and the Tatro Wealth Advisory Group. Thanks for tuning in. Hit the subscribe button on the YouTube and like and share and follow us. I would love to hear from you if you do have comments. And take a sec, if you'd like to book a no obligation consultation, go to www.speakthorob.com. Thanks for tuning in, guys. See you in the next episode of The Boardroom.